Okay, good afternoon, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there. Just let me know that it is working. I hope everybody's having a fantastic Friday so far. It's been a good day. We've had a good trading day, so I've been obviously happy because we're making some money, which is great. And I'm looking forward to going through our basic training webinar today with you guys. So today's topic, we're going to talk about what is liquidity. And I'm really excited to talk about this because it is largely has so much to do with what we do and is a huge factor in how we are profitable in the markets. But before I get started, again, I just want to welcome everybody here. Also just want to give a shout out to everybody in the recording. Just want to say hello to you. Anybody that's watching this on the YouTube, I just want to welcome you here as well. Feel free to put your questions or comments in the comment section below, and I will respond to those. In addition to that, if you are interested, and I'll probably repeat this again, but if you are interested in taking my live signals, these trades that I take in the markets, there is a link in the description below where you can click on that and it will take you to the Telegram channel where I post all my signals that you can then go ahead and take. So if that's something that's interesting to you, go ahead and click on that link. But without further ado, guys, let's go ahead and get started. As always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So liquidity. Let's talk about liquidity and how important liquidity is in the markets and how you can use it to make money, which is the goal, right? So when we're trading, let me pull up a different chart here, okay? The market likes to move from here. In fact, I'm going to just draw something out. In the market, you have structure, right? We've talked about this in other webinars, right? You have a resistance level, you have a support level. And what the market likes to do is it likes to move back and forth from resistance to support, resistance to support. And at some point, the market's going to break out of one of these ranges, right? And you're going to see it go to a different resistance, right? And maybe the market breaks out and it goes to the next resistance. And then it comes back and retests old resistance and it becomes support. Maybe the market wants to come down significantly. Let's say it wants to come all the way down to here. It could totally do that. It comes to a new support level, right? And then it bounces, hits resistance, and does its thing. The market just moves back and forth between support and resistance all day long on different time frames and on every single market. Okay. The market needs to create liquidity or places like these areas where the market's likely to turn or even break through. So I do want to make clear that I'm not trying to say that every time the market's at resistance, it will pull back, or every time the market's at support, it will move back up. The markets don't work that way, and I'm not saying that they do, right? So our job is to find areas where there's pools of liquidity, pools of money, where there is likely to see a reversal or even a breakout. And how do we identify those types of things? So I've developed a 3-step model, which a lot of you are familiar with, right? On how I work with liquidity and how I identify liquidity and how liquidity can help you with your trading. So let me actually do an example here with you guys. Let me see if I can find a good example of a liquidity zone. Let's see here. Yeah, I actually found one right here. So every chart's got one, right? I didn't even have to move because I knew every chart's gonna have one. So let me show you an example of liquidity. So in fact, let's actually just use the rewind button so you guys can see this, because this is pretty cool. Okay. So let's go right here. Okay, so here's the market. Okay, this is the pound dollar on a 1-hour chart. You can identify multiple levels of support and resistance. You could say, hey, look, this appears to be a support level right here. That's support. This appears to be some resistance right here. You could also argue that, there's some support down here, right? And there's even other levels right here that you could probably identify. But for the sake of simplicity and just marking out the most basic areas, these would be your support resistance zones, right? So as we move forward, we're waiting for the market to either break out either up or to the downside of this not liquidity, but of this support resistance area. So we move forward with the charts. We let the market do its thing. Let's speed this up, right? And then ultimately this market breaks above this resistance right here, okay? This is a key clue for us when we're trading. We're trying to find and identify key areas of breakouts. Let me actually close my blind just a little bit. It is super snowing outside over here. In fact, I got a notification from the weather app here saying that there's a snow squall going on, and I can see it. It's kind of crazy, and you can probably see it on my face. So I'm just going to close this real quick, and then I'm going to continue what I was saying. Just 1 second. Okay, so that should help a little bit. Okay. I mean, I also have a really white forehead, so maybe that's part of it. But anyway, so we've got a market here that has now broken out of support. Okay. It's broken out of it's like resistance here, not support. It's broken resistance. This is a key clue for us. We identify step one, where is the structure? And actually, let me do this real quick. So this is the structure. You can definitely see this is the structure. It respected that structure right here as well, but it ultimately broke right here. Okay, that's where structure broke, right? So that's step two. Step three is to find the liquidity or the mechanism that created the break of structure. And my manual way to do this is you can actually just use your naked eye to find this. There's other tools, which I'm going to introduce in just a moment, that can help you find these liquidity zones. But I would argue that whatever took place, maybe starting from here to about right here, you could even localize it and say, this is it right here. This is the liquidity, right? I'm also going to include just this right here. So whatever consolidation, whatever orders took place in here is ultimately what led the market to break out. So if the market ever returns back to the liquidity, not necessarily back to support, but if it returns to the liquidity, there's a good chance you're going to find a reversal because there's a lot of orders that were placed in here that ultimately created this breakout. So if you think about it, if somebody is short and this market's going up, they're in trouble, right? They're selling the market. So they can close out their liquidity if the market comes back to an area like this. There's a good chance they'll be able to get out for a profit and or cut their loss and make it a lot smaller. Additionally, there's people like you and me who are looking to make a profit, and we can make a profit if the market comes into this liquidity zone, and then ultimately if it rises from there, we're going to be in a really good spot. So now let's fast forward. And so what I'm thinking is the market would come down into here and then go up because it's a liquidity zone. So let's let this fast forward. Let's see what happens. Okay, it just tapped into liquidity right there, and now it is on its way up, right? It's on its way up again. Okay, so that is a great example. It just tapped into it. I guess we didn't need this whole zone. You could have probably just localized it to just that, or even this. But yeah, I use this whole thing. So the market likes to float from one liquidity to the next liquidity, right? And if we let this thing fast forward even more, let's see if we can find an apex high. Right? So that's where the market is right now. So that's stopped right there. So it came to liquidity again and it's just stopped. What I teach people is this too. If you come over here, ask yourself these questions when you're looking at a chart. Why did the market stop right there? By the way, I haven't even looked at this chart. Like I am totally just totally rawing this with you. Like, this is total raw information. I am just looking at this from a naked perspective. I know I did look at this liquidity before, but I'm telling you, I do not know what's behind this. Like this line right here. I just drew this line because there is a resistance right there, and I'm just guessing that there's probably some liquidity that if you were to go to the left side of the chart, you would probably find liquidity out here somewhere, which we're going to do in just a moment. Look at every single pivot. I mean, pick any currency pair you want, and find the highest high and the lowest low. Go back, ask yourself the question, why did the market stop right here? Why did it flip and turn right at this very spot? Find the commonalities behind why the market flipped at certain zones and why it doesn't flip at certain zones, right? So if we just go to the left side and see if we can find the last time the market had hit this area, it was right here, okay? Turns out this is also a support resistance area. You can break it down, right? You can say, yep, this is support right here, definitely support here, definitely support here. It actually was resistance right here. It acted as support here and just many other times, right? And that's where the market came and stopped, okay? So that's a support level, and it ultimately broke structure. It broke a couple of structures. So it broke this structure as well, right? This is a structure zone. That's resistance there. It's support right here, and it's support here. It's also support here. So our job is to find the liquidity or the area where this is most likely to turn and reverse. Well, if you zoom in to what created this break of structure, because you've got two really good structure zones, I would argue that this is liquidity right here, because whatever took place in here ultimately led to this massive breakout. That's a liquidity zone. It's also known as a supply zone, okay? Demand zones are always below the market, and supply zones are above the market, okay? So that would be a supply zone. And then it does look like, I mean, you can see the market actually wicked up into that supply a while ago. This was back in February, but this whole thing right here is liquidity, because whatever took place in here, this back and forth momentum, whatever was going on here ultimately led to the demise of this support level, and the market just broke out from there and never really came back until recently. Took like a month later, right? That's liquidity zone. Okay, that's how you can find stuff. You can find this stuff out on your own, or you could technically use an indicator, which I'll show you how to do that as well. Let's go to a random chart. You guys pick a chart if you want, but I mean, I don't know, just anything. I don't know, maybe the euro pound. That's one I like to trade. Look at this market. Look at the highs and lows. Okay, you got a high. You've got a high up here. You got a low down here. You've got a high up here, right? A low right here. Okay, let's break this one down. Actually, let's break this one down right here. Let's first draw a line. So let's grab a vertical line, or a horizontal line, excuse me, right there at that low. Now go back to the left side of the chart and find out why the market stopped right there, right? Okay, it all makes sense to me. You can look at this. So this is a structure point right here, and this is a structure point right here. Oh, let's get it right here. Okay, so this is structure. So you got structure right here. It has structure. Technically, that structure basically touches right there, almost touches. It touches here. Kind of broke through, honestly, right there. Has a support right here on this one. You've got support on this one, or resistance on that one. Resistance right here. Okay. It acts as a support right here, right? It acts as a support right here, right? That's definitely a structure. Both of these are structure points. Definitely structure, right? You're seeing that, right? And you just have to practice if you're new. You have to go find these on your own if you're new, and just kind of practice and find these, right? Okay, so now the question is, okay, this is where structure broke. Look at this. It broke right here. This structure broke right here. And this structure technically broke, oops, it technically broke right here, right? So if structure broke in both of those places, at basically on the same move, who's the culprit? That's the question. Who caused this? Right? We're this big detective agency. We're trying to find out who caused these breaks in these beautiful structure points. Who caused it? Well, whatever happened in here caused it. Whatever consolidation took place in here is liquidity. This is liquidity. 100% that's liquidity. Okay, look at the market. It dipped into liquidity right here. Boom, it's gone. As soon as it dipped into liquidity, it's gone. Dipped into liquidity here, gone. Let's go keep fast forward. Let's see. Dipped into liquidity right here, gone. Absolutely gone, right? This one, at this point, it didn't work out. Not all of them work, but I can also tell you why this one didn't work. It's because it's already been used multiple times. Once liquidity has been tapped into 1 or 2 times, it's not useful anymore. It becomes just part of the market because that imbalance has been filled. Right here, there's an imbalance of trades after when the structure breaks, there's an imbalance in this purple area. Okay, there's an imbalance of positions. So if the market ever retraces and comes back to that imbalance, you're likely going to get a reversal. Now, if that imbalance gets filled, so if it has multiple opportunities like it did here, it had 1 opportunity, 2 opportunities, and a 3rd opportunity to fill right here, the liquidity becomes less and less useful because it's all the imbalance that existed is now balanced. Okay, there's a balance of trades there. And it's the imbalance that creates that V-shaped reversal. Okay, but now the balance has been filled, it's been flattened, it's a beautiful thing. And so it doesn't work anymore after it's been used multiple times, right? Let's do another example. Okay, let's delete all of this stuff. Actually, let me control these, use that. Okay, let's delete all this stuff, remove drawings. Let's do another one. See this? This is a massive low right here. Okay, let's find out why the market stopped right there. Why did it stop there and not anywhere else? Why there? Well, let's go back to the left side of the chart. Let's find out why. So we come over here, come over here, we come over here. Got pretty close right there. Didn't quite touch though. We keep going. Okay, here we are. So this is where the action takes place. Okay. Okay, so we have here, and this is how you find it on everything, okay? This is a resistance area right here. Can't argue that that's structure. Everyone better agree that that's structure, or else we need to have a market structure 101 class again. That's structure, okay? Right, see how many times that touches? That is a structure point, okay? Structure. Look what happened right here. It broke structure right there, broke it. It worked so hard to create that, and then it just broke. Okay, well, who caused it? Who's in charge? That's the question you want to ask. Who's the culprit? Who created this? Okay, there's a couple of places. You could probably argue that this was part of it. I would say so. But then also this right here, this is the beginning of the move, of the consolidation that ultimately led to this massive leg to the upside right here. This all started right here. You could argue that it's this too, except I'm going to argue against it. Here's why. This area did not break the structure. This area only came up to the structure and pulled back. So that liquidity I'm not as interested in. If you want to say that maybe this is it right here, I'm not so certain about that. I think this is the structure right here or this is the liquidity, because whatever liquidity took place in here, I'm going to say this whole area. This whole thing is liquidity right here, because whatever they did here ultimately caused this thing right here. That's why this is liquidity. So now you go fast forward in the future, if the market dips into this, what's going to happen? Look at that. Dips into it, gone, right? Because there's an imbalance there, which should also note that imbalance is starting to fill. So you want to be the first person to this. If you're not the first person to this, it's not as likely to work out. It can work out multiple times, but again, the more and more times the market fills the liquidity, it's not as likely to work. So now we come in, comes right here, touches this. This is all liquidity. Gone, right? Goes up. Absolutely gone into that. Once it hits that liquidity, it's gone. Okay, we keep going, keep going. Hits liquidity, gone. Right? Right here, hit liquidity, went pretty deep into it, but still gone, right? Pretty cool, right? So the steps are this. Step one, what's step one? Identify where structure is in the first place. That's actually not too hard. Most of you can do that. Just pull up a naked chart, just you and the candlesticks. That's it. Just you and the candlesticks, baby. That's it. Nothing else. Okay. Let nobody else, influence you. Don't let any other indicator influence you. It's just you and the candlesticks, right? Find the structure, find the support and resistance level. Make sure that support and resistance levels has been hit multiple times. It's been touched multiple times, so you know it actually is a structure. Step one. Step two is define where it broke. Anybody could do this. Even a child could say, oh, it looks like the line broke right there, right? That's all you got to do on step two. Step three, and this is a little more difficult, but everybody can still do this. Step three is to find the mechanism, the culprit, or whoever created the breakout. Find the consolidation that created the breakout necessary, right? Which we've identified as basically this whole consolidation. This whole thing basically created, well, really just this. Whatever this is right here created this breakout, and that's liquidity. Okay, that's how you can find liquidity on your own, just you and the candlesticks. Okay, and it works on all these different time frames. You don't just have to go out on this hourly time frame. These are pretty macro breakouts, very big breakouts that you can find. Okay, if you ever look at the charts, what I want you to do this weekend or this week, for anybody, if you're watching this, I don't know, in a year from now, if you're watching it while I'm doing this right now, go pull up any chart of your favorite market. I don't care what it is, Bitcoin, Tesla, the Forex market, futures market. I don't care what it is. As long as you can trade it, pull up that chart on any time frame. Go look at the apex low or apex high. Draw a horizontal line, then just go to the left. Find out who and why did the market stop right there, and you will find out. Right? With that three-step scenario, three-step setup, you'll be able to find out who caused it. And that will be, if you can figure out how to master this, you will take some of the greatest trades you've ever taken in your whole life. And people will ask you at breakfast on Saturday, how did you take that trade? How did you know the S&P 500 was going to do that? How did you know Tesla was going to do blah, 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 blah? How did you know the euro was going to go up this week, 300 pips? Well, liquidity. Find liquidity. Trade liquidity, right? Okay. All right, guys. So that's how you can manually find liquidity. Now what I want to do is show you some other tools that are I want to show you some tools that you can use for especially beginning traders, because what I did sometimes takes a little technique and a little bit of a keen eye to find that kind of stuff. I have a little cheat for you, and you're going to love it. There are indicators out there on TradingView that you can use that are free that will show you where these institutional order blocks and or liquidity is sitting. So I have an indicator right here called Order Block Detector from LuxAlgo, and I also have Sonar Labs Order Block Indicator. If I turn these on, it will tell me where liquidity is. So I'm turning these on here. I'm just going to turn on LuxAlgo for a second. I'm on this 1 hour chart, and so I get a few more options than I would say on a daily chart or a 4 hour time frame because I'm on a smaller time frame. So I get more options. So what this is telling me is, and I'm not exactly sure how LuxAlgo figures this out. It's one of the things that you don't always know when you're using somebody else's indicator, right? Rather than doing your own analysis. But it's a very helpful tool, especially to somebody who's brand new to trading. Right up here, you've got liquidity because there is these are institutional sell blocks. So there are institutions selling at these zones, and LuxAlgo is letting us know. They're letting us know beforehand. They're also letting us know that institutions are buying right here, and institutions are also buying right in here, right? This is great information if we're trying to take a good trade. As you guys know, we took this signal this afternoon with the USD CAD. We are selling the USD CAD right here, and we are doing very, very, very well, right? We're already up on this trade that we took late in the day Friday. We're already up on this trade 26 or so pips. I wish we had gotten in earlier, but such is life. At least we're in and we're already profitable, right? So with this trade on the hourly chart, we saw that LuxAlgo had institutional sell blocks right here. There's two of them. If you go to a 2 hour time frame, it's right there. That's an institutional sell block, and we got pretty close to it. If you go to a 3 hour time frame, that's still an institutional sell block. You go to a 4 hour time frame, it's saying the same thing. It doesn't always say this. I'm letting you know because this is actually kind of rare to get 4 or 5 time frames saying the same thing. 4 hours saying that's an institutional sell block. You go to a daily chart, it's an institutional sell block right up in here. This whole thing is institutional selling. The next institutional buy block is all the way down here. That's the next institutional buy block right here, right? So there's a long ways to go. This thing could go 100, 300, 400 pips potentially before you get the next real big buying leg. This could go a long ways very quickly, and it could do a lot of cool things. Okay, that's on a daily chart. On the 4 hour time frame, there's actually an institutional block right here, and that's where I'm looking to take my profits. But I should be able to get that. I should be able to get it. But so it's not necessarily too late. You could take this trade and still write it for 128 pips. You're just not going to have the same reward to risk ratio that we have unless you were subscribed to the program. Then you could have been alerted to this a little bit faster, which, by the way, if you want to take all of my signals not for free, well, I have a 14-day free trial. If you want these trainings in real time and you want to come to my live trading sessions where I call these trades out, that I trade in my live FTMO account. I have a 14-day free trial. I do 6 live trading webinars a week where you can come and watch me trade. They're all recorded if you can't make it either. And if you want to take my trades, you'll get access to my premium signals channel where I post all of the trades that I take. There's a link. It's the second link in the description below on YouTube. If you click that, it'll take you to the 14-day free trial. It'll ask you to create a little account with me so you can log into my website, and you'll have access for 14 days. If you don't like what I'm doing, which I don't know why you wouldn't, but if you don't like what I'm doing, you can unsubscribe without paying me a dime, and you'll get all my signals for free for 2 weeks and all my tradings. After the 14 days, it's $97 a month. So if you want to stick around, you can stick around. I'd love to have you as part of my community and part of the camaraderie that we have here. Yeah, hopefully you do stick around. I think you will. You can't afford not to have these trades. That's what I'm thinking is you'll want to stick around. But that's in the link below if you want to give it a try. Okay. All right, guys. So cool. So anyway, so that's the signal that we took, and we're in this. This is a live trade that we are in right now. And we are ready to go. It is exciting. And this was very much because of LuxAlgo's order block indicator and because of our own analysis, of course. But there's other things we did. We talked about it this morning in the analysis during the Bankers Close webinar. We talked about this trade in more detail. So if you're interested, I'd love for you to learn more about what we're doing. Okay, so there's this trade now, and there's this indicator, and you can use this on any chart, right? Right, there's a bunch of selling pressure up here, as you can see, a little bit of buying pressure in here. There's some buying pressure right here that the market hasn't tapped into yet, right? These are order blocks that you can use if you don't know how to find this on your own, right? I still use them even though I do know how to find order blocks, right? Okay, so you can go to any currency. You could pull up, I mean, heck, you could pull up stocks as well. You could pull up, I don't know, like just look at Tesla, for example. You know, a lot of people like to trade Tesla. Okay, here's your order blocks, right? Got all these order blocks in here. Nice little selling block right there. Looks like they're trying to send Tesla lower right now, these institutions, right? Next real strong buying block isn't till here or here on the 4-hour time frame, right? You go to a daily chart. It's kind of in a no man's land right here. And really it's looking just kind of bearish. Okay. Go to a 1-hour chart. How does Tesla look here? Mostly selling pressure. So maybe we'll see Tesla go down in the next couple of days. I'm just going off of the order block. You can use SonarLab. SonarLab's saying there's a bunch of selling pressure right there, right? Looks bearish. That's what the indicator's saying. Tesla's probably going to go down a little bit, right? You pull up other things like, I don't know, the VU, right? Just the S&P 500, pull that up, right? Little buy block right there that worked out. Let's see, there's a sell block up here. How about do a 2-hour time frame? Sell blocks there, buy block there. Everything's kind of in the middle. You don't really have anything really close to a buy or sell block right now on here. Makes sense. It's Friday. You're not going to see a lot of stuff going on too. How about a daily? I'm just curious. Where's the daily? A lot of buy pressure in this area. A little bit of sell up here. And right now it's just kind of, we don't know what we're doing, right? All right. So kind of fun to see, right? Okay, so let's go ahead back to Forex. Okay. So back to Forex. And I'm going to show you some other things. So obviously there's that. You've got Sonar Labs order block. I love, or not Sonar Lab. I love LuxAlgo. I also like Sonar Lab. Sonar Lab is good. Sonar Lab gives you a lot more order blocks, and they're based off of candlesticks. I believe, and don't quote me on this, but I believe LuxAlgo, their order block indicator is based off of actual data that they collect. I don't know how they're getting it, how they're privy to it, but they're doing a really good job. So hats off to LuxAlgo there. I hope they don't start charging us for that, because that's awesome. And if they do, I'll probably have to pay for it. But you can click on indicators here in TradingView, and you can, by the way, TradingView is free. Like you can have your own TradingView account. You just log in with Facebook or whatever. It's totally free. Just go to tradingview.com, make an account with Facebook or Google, or your own login, and you can get started. So just search order blocks, right? Order block, right? Tons of people have their own, right? There's this one that a lot of people are using. Let me pull this one up just for fun. A lot of people are using this one. I don't really know how to use this one though, which is fine. I've never used it before. How does this one compare to the USD CAD? Just out of curiosity. Oops. Well, that's interesting. They're not even saying, no, they're saying this is a bear block, right? Yeah, the blue's a bear block. That's a bear block, but then they're saying there's a bull block right here. We'll see. That's on a 1 hour. Let's see what the 2 hour says. I've never used this one before, and so far I don't like it that much. And it's crazy to me because a lot of people are using this one. Okay, so they're saying this whole thing's a bear block on the 3 hour, which is what I've been saying as well. This whole thing's bear. This is going to go down. This is the bullish block right here. Okay, cool. Well, it's good to see. I don't know if I'm going to use that one. I've never used it, but you can discover new indicators just by searching for them here, right? Just search order blocks or whatever you want to find, and there's tons of different people that have their own. But these are the two that I use, and I keep them on my chart. Lux Algo, and I use Sonar Lab. All right, guys, that is how I find liquidity. So, and that's how I find it if I am new to the market. If I'm new to the market, I will use Sonar Lab or Lux Algo to kind of help me find stuff so I can start taking some good trades in the beginning. And you can find a lot of liquidity with this, right? And when you're using these, it helps to go on multiple time frames. If multiple time frames are saying that there's an order block there, then most likely there's an order block there. But if it's only one time frame saying that there's a buy, I don't know if I would use it, right? I don't know how successful it's going to be, right? So just something to think about. If you are looking to trade and learn how to do this manually so that you can find these trades on your own, I would highly recommend that. And you'll want to go through my 3-step process. Find structure, number 1. Find the break of structure, which is really easy, and that's number 2. And number 3, find the culprit or the mechanism that created the break of structure, and that's how you're going to find liquidity going forward. Okay? And that's how you're going to take the best trades you've ever taken. It's by finding liquidity. All right, guys, I hope this was informative and helpful. Have a fantastic weekend. I hope it's awesome. Enjoy it, and we will see you guys on Monday. Enjoy your weekend.